banks are in big trouble. There's never been a bigger line at the emergency lending window from the Fed to banks than there is now. So we can continue to hide from the problem, and as they did in 2007, remember, the crash doesn't start necessarily today. It's already started. It doesn't mean the markets are going to react right away, but going forward, there are so many warning signs out there that at some point it's just going to give it up, and we're going to see another meltdown like we've seen, a number of times in past history, which again, history will repeat itself.
This is Kaiser Johnson, and here's the weekly special for November 13th through 20th, 2023, while supplies last. XF $20 Gold Liberties at $1.65 over Melt, and 2023 Silver Philharmonics at $3.40 over spot. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Todd Bubba Horwitz from Bubba Trading. Todd, thank you so much for joining us today.
Hey, great to be back with you, Elijah. Always a pleasure.
Well, it's great to have you today. I wanted to maybe start out with a general outlook for the U.S. economy right now. We are seeing some troubling numbers obviously coming out. We're seeing Moody having a negative outlook for the U.S. debt and the U.S. Debt rating. Your perspective on that initially? It didn't seem like the markets were that impacted by that announcement.
The markets didn't care at all that the debt got downgraded because, of course, we have to remember that in times like what we have now, okay, the very wealthy are doing a great deal of buying and they have the capital to do so. The middle class does not have the capital. And of course, it is the middle class that's going to finance this debt downgrade. If you're not quite sure what the debt downgrade means, it's like taking your FICO score, your credit score, and reducing it, raising the amount of interest you're going to have to pay for money that you borrow. So it means that the United States is going to have to pay more interest to get bonds, to get people to take our money, to loan us money, basically.
There are a lot of forecasters out there saying that interest rates are going to fall in the spring. Your perspective on that? It seems like if Moody is forecasting that the rating of U.S. debt is going to be going down, interest rates have to stay high. They couldn't go lower.
Well, I don't know how interest rates are going to go down. Of course, we're dealing with a bunch of morons. Okay, the Federal Reserve is a bunch of morons, as well as the government. And of course, they continue to tell us how well we're doing with ridiculous CPI and PPI numbers, but they're still so far away from even their 2% target on their lying numbers. Okay, there's no way that inflation is at 3%. I mean, just look at your own spending, and the simplest way to determine what true inflation is look at your own spending. I mean, gasoline's up 53%, groceries are up 20%, the average income's down $7,000 a year. So again, how can we get there? And if the Fed's going to maintain this course of that mandate of 2% inflation, which they're never going to get to regardless, then they have to continue to hike rates. There's no way they can bring rates down.
And it seems like when we look at the economy in general, I mean, there are other issues. For example, with the banking system, I know you have mentioned that the banks are borrowing so much money through the reverse repo program that it's kind of like what we saw right before the 2008 crisis. Your perspective on that, the concerning developments in the banking system?
Well, I think the banking system's in big trouble. I mean, we've already seen it with some of the smaller banks. Banks are over leveraged. But of course, they don't care about being over leveraged because they know that they have the United States taxpayer to bail them out through the Federal Reserve. The banks are in big trouble. There's never been a bigger line at the emergency lending window from the Fed to banks than there is now. So we can continue to hide from the problem. And as they did in 2007, remember, the crash doesn't start necessarily today. It's already started. It doesn't mean the markets are going to react right away, but going forward, there are so many warning signs out there that at some point it's just going to give it up, and we're going to see another meltdown like we've seen, a number of times in past history, which again, history will repeat itself.
Now, when it comes to the stock market, I know we have seen a dip recently. It seems like we are having a bounce, though, in the last couple weeks. Your perspective on where the stock market is? I know some people out there have been saying that really we're in the second phase of the crash. The first phase really being in 2022.
Well, listen, I've called for a 50 to 70% haircut for the last about a year, and I still think that it's coming. But again, as I said all along, I can't tell you when that is coming. I can't time when it is coming. I can only tell you that the warning signs were unbelievably clear that there's going to be a major sell-off. Yes, the markets are right now, but again, if you just look at history, historically, with the exception of December of 2018, markets are higher towards Christmas. It's the Santa Claus rally, as it's known.
Now, how long do you think this will be? So it sounds like the rally right now, you're expecting to be a short-term rally.
Well, I mean, listen, we're unfortunately, with Thanksgiving next week, there's about 3 legitimate trading weeks left in the year, although we've obviously got after the December expiration for options, but most traders take off. So there's a really legitimate 3 weeks, and I would not be surprised to see the market stay up in these levels until the end of the year. I would expect next year, the first quarter, to be relatively ugly once we put everything together and people finally realize it. But again, people don't like to be miserable during the Christmas season.
Definitely not. And now we can turn to the precious metals. I know we have been seeing a little bit of a rally after this sell-off we saw last week. It seems like we saw quite a bit of strength in the precious metals based on the Middle East conflict. Your perspective on precious metals going into the end of the year?
Well, I think that gold will make a new high. I did think that silver was going to get over 30, but that was a while ago, and obviously I don't think that's going to happen this year. I do think that the precious metals are on their way higher, in the future. Again, will it be right away? I mean, gold is obviously very close to making an all-time high. It wouldn't be a far stretch to say that it'll make it before the year's over. Silver, I think, will rally, but I'd be very happy if silver got back, to $27, $28 before the end of the year. Although I thought all along that would get over 30 this year, so very wrong there. But I do like him, and I think if you're going to be a precious metal player, then you have to buy physical metals and realize that, hey, I got to hold on to them, and I'm not going to sell them. So, which only means don't buy it with money that you can't afford to lose.
That's a good point. And even having the physical precious metals in your own possession kind of helps you not buy and sell just when we see these price swings. But as for trading, are you long or short metals right now?
I'm actually long a lot of physical metals, and I'm long the board as well. So I'm long the futures contracts, and I'm long metal physical, and I'm long some of the stocks I like to gamble with that are directly correlated to gold or silver.
Now, I know at least on the retail side, what we're seeing is not as much demand right now, and even a few people selling back. It seems like the sentiment is very low when it comes to the precious metal markets. On a technical side, or I guess a more trading side, what are you seeing right now? It seems like maybe to be a contrarian is to be in the metals right now, but your take?
Well, I mean, I think the trends are higher. I mean, from my algorithms that I use, the trend is higher. So certainly they look like they're going higher. They want to go higher, but again, overall participation in all markets that we can quantify has been very low. Whether it be any commodity markets or any equity markets, the volumes have been at about 60% of normal. So it's really hard to get a read there, but we don't get the volume numbers on what's being traded in physical.
Now, I know you have been bullish on oil and saying that oil could be making new all-time highs. We have seen a bit of a pullback, interestingly enough, ever since we had the conflict in the Middle East, which has confused a lot of people. What is your take on where oil is heading in the future, and what kind of impact is this Middle East conflict that continues? How is that going to impact the oil price?
Well, first of all, obviously we've seen how it's impacting. It's not, but let's look at it from a bigger picture. If we go back to right before the crisis started, about a week before, oil was at $95 a barrel. When the crisis hit, oil rallied back to $85 a barrel, and now we're in the low 70s. I think what you're going to see is Saudi Arabia and OPEC cut production. They've already started to do so once again, and they're going to force these prices higher. What the low prices tell us today is the economy is unbelievably weak, and this is more that takes my point, and it gives me the evidence saying that the market's in trouble, the economy's in trouble, because when you're not using oil, Okay, you're not getting production, you're not getting services, you're not getting deliveries, because the bottom line is 80% of everything we do has something to do with fossil fuels. So it's telling us how slow we actually are right now. And it's telling us, but again, when they cut production, it's going to force prices higher. And you know that Saudi Aramco is the biggest corporation in the world, and they will force these prices higher by cutting production because, of course, our administration refuses to drill oil again because they're trying to hold on to this ridiculous climate change crap.
And you've mentioned before that if the oil price spikes, inflation, real inflation, how people will experience inflation, is going to go through the roof, even if the CPI doesn't move that much.
Well, the CPI is a lousy number because it really doesn't account for what Americans or people use. The people spend more money on food and energy than anything else, and those are the lowest quantifiers of CPI. Okay, I mean, how often you go out and buy a new computer or a new refrigerator, which are things that, we don't usually buy, and a lot of people can't afford to buy them anyways. So the products that we use each and every day are way higher than they should be, and that is what real inflation comes down to.
Can you give some, examples of how this is really impacting the average person right now? Because it seems like what we're seeing is the cost of living just continuing to stay high, even though, they're bragging about how inflation is under control right now.
Well, I mean, look, the bottom line is that the average consumer is in debt up to their eyeballs. I mean, we're in the trillions in credit card debt. Now, again, the numbers are kind of misleading because of the inflation, but there are more people at limit on their credit card than ever before in history. And of course, we know that those are usury rates when they're going to have to pay it back. So they're never getting out of debt. And this is exactly kind of what this administration is trying to drive for. This will create the socialistic environment they're trying to get to.
Part of our channel is about liberty, right? So it's important to understand the crisis, but also understand, well, what is the solution that the average person can, steps they can take to achieve liberty, rather than, you mentioned the socialist agenda, right? Or the government is always going to come in with a solution. So if people are hurting right now, what are some steps that they can take towards financial freedom, rather than, having to have the government step in and save them?
Well, they're going to have to stop spending. I mean, they're going to have to. Everybody has to take some pain and punishment if you want things to be like they were back in 1776. I mean, again, you have to stop spending. You have to stop over leveraging your credit card. You have to quit the participation in building the BS economy that we have here right now. And you have to show them that, because you have to force some of the bigger companies that they have to make a decision. I mean, let's face it, most of the big businesses, there's very few small businesses. So every dime you spend, you're spending it to a major corporation, which is all for socialism, because the wealthy and the big corporations benefit from socialism, whereas the little guy benefits from capitalism. And that's, once you've got there, you don't mind socialism. It's getting there that it bothers you. And of course, if we want to get back to bringing in small business and back to a capitalistic society, then we have to show the big companies and the big corporations that screw you. We're not going to spend our money with you, only under duress and under emergency of things that we have to have today. But of course, we've seen a lot of lazy Americans that continue to say, for example, that this is the best country in the world. Well, it may be the best country, but we're going backwards and catching everybody else going backwards instead of forcing the rest of the world to catch us by going forward. And the United States is the one country in the entire world that could be totally self-sufficient. We could be an island. We don't need anybody. And I'm tired of giving our money to China. I'm tired of giving our money to Saudi Arabia. I'm tired of giving our money to everybody else except for the American people. And it should stay here. But that is not the agenda of the administration in power right now.
As we look into what is coming into the future, as we've been talking about, for example, a stock market crash you have been forecasting for quite a while, and that's going to hurt a lot of people. So already they're in a whole lot of credit card debt right now, and if their IRA or their 401k is going to be cut in half, that's not a good thing either. So can you expand on some more steps people can take to really, because I know that you also trade in the market as well. So what are some prudent principles that people should have in mind How much should they stay in the system right now, and how much should they retreat and protect themselves?
Well, they should stay in the system forever. I mean, again, if you believe in America and if we're going to survive, which I would have to assume we will, even though there'll be some rough times, you can either stay and if you have the capital, or hedge, which is what we do, and hedge your portfolio so that you can guarantee and know exactly what your risk is to the downside. But many of the middle class have already ravaged their IRAs before the markets ever collapsed, because, of course, many of them are spending well beyond their means. It starts with your own. If you have a lot of credit card debt, you shouldn't be putting money in your IRA. You should be paying that credit card debt off. Okay. You have to become as debt free as you possibly can. Okay. Overspending. And of course, we are a society that is trained to overspend by all the advertising. We go back to 90 days, same as cash. Nobody knows the gimmick behind that the interest rates are usury rates and it kicks back that they want. You have to be more diligent about your dough. And you got to start paying off your debt first before you give it to your advisor, before it goes into your IRA. Your high debt at 26% needs to be paid off, because your IRA ain't going to pay 26%.
So overall forecast then for 2024, what do you expect in the stock market, precious metals? If you could kind of remind our viewers your forecast for 2024.
Well, I think we're going to collapse. I think the markets, I don't know. Again, it's hard. I can't time it, but I'm sticking with my 50 to 70% breakdown of the market. Okay. I believe gold will make highs. I think gold probably could trade, 2,400 and high. It could go higher, but again, I'm never going to say to you it's going to be 5,000, because there's so many levels it has to go through to get there. But 23, 24, 25, 2,600 is realistic. I think silver will get over $30, maybe $35 next year. Okay. I think the markets are in big trouble. And but I don't think that you should say, I have to put all my money here or put all my money here. I think you stay a diversified investor, because if we're going to play the statistics of the United States of America, the stock market has gone up 8.5% year over year and 10% since 1950. So you have to, if you believe in America and you believe in this country and you believe that we will get our act back together at some point, then there's no reason not to stay in the stock market. Just remember, don't invest with leverage. Invest with money that you can afford, that you're not going to have to get back to make your car payment. Okay. Your bills have to be paid first. Your high debt loans have to be paid first. Then you invest your money.
Well, Todd, we really appreciate your time today. If our viewers would like to continue to follow your work, where can they find you?
They can find me at BubbaTrading.com. And if they have questions or want to come and see my Monday night show, it's Bubba at BubbaTrading.com. They can email me direct. I'll be happy to answer the questions. Just make sure you refer to Elijah so I know where you're coming from.
Did you have any last thoughts for our viewers?
Just be careful. Again, don't fall for the hype. Don't fall for the BS. We're getting told a lot of bad stories in this market, in this country, and this country is really degenerating because of the current administration. And again, whether they be Republicans or Democrats, neither are on your side. They are all kind of grabbing your money, and we need to change the direction of our politicians, but it has to start at the top. And right now, the top is worthless as you can possibly be.
Todd Bubba Horwitz, thank you once again for your time, and God bless.
Thanks, Elijah. Appreciate it.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we can let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Kaiser, my brother Elijah, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.